Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen the markets just continue to balance in a very narrow range, and our short-term directional bias continues to be neutral. So the market can really tip in either direction. One of the recent bullish signals in the market has been how well the Russell has been holding up throughout the recent balancing activity. But at the same time, Russell is near the upper edge of its balance, which means it's near resistance. So we do need to see that strength continue in the Russell if we're going to see the buyers continuing to maintain some control here. And if we start seeing a lack of strength or outright weakness on the internals, on the advanced decline, on the NYC tick, then that can lead to continued selling pressure in the S&P. So we have to be nimble, we have to be flexible with our day time frame bias, and I think Russell is going to provide a pretty nice heads up this morning. So if it continues to hold up pretty well, or if it starts to break above the 1246 to 1248 area, then that can lead to some buying in the S&P as well. Heading into the open, we have the immediate support at 71.5 to 73.5 in ES. And if ES is holding above that area, it just tells us that the market still has a shot at attracting buyers and actually heading higher. In order for buyers to really confirm that they are stepping in, we'd have to see a breakout above 76 to 78. Beyond that, we have the high volume node of the balance at 79.25, and then the first area of decent resistance is 81.5 to 83.5. And in order to break out beyond 81.5 to 83.5, we would have to see broad market strength. Ideally, the Russell should also be breaking out at the same time, even beyond the 1250.5 recent swing high. And if we are seeing that, then perhaps we can take out 81.5 to 83.5 on the upside and test 86.75 to 87.75. And then we have the stronger resistance at 89.5 to 91.5 with the all-time high up there. So how the market responds to 76 to 78 is really going to help set the tone. And again, we do have to see that broad market strength and that upside momentum in order to get that upside move, especially anything beyond 81.5 to 83.5. So if we're seeing outright weakness right off the open, then understand that because the Russell is near resistance here, it can quite easily pull back, and that can lead to the S&P heading lower as well. Now, below pre-market support, we have yesterday's low at 68.5, and then we have support at 64.5 to 66.5, which essentially marks majority of the balancing that took place over the last 3 weeks. And this is also the area that would have to hold if this breakdown attempt is going to continue to be a failed breakdown attempt. So if we are heading down on excess weakness, if we're heading down with the tick completely below zero and Russell really cracking down as well, then we do have to be cautious at the initial support zone. So that is a valid area of support, but it requires a real-time read. We have to see the state of the market in real time and then figure out if there is sufficient risk reward to justify entering long at 64.5 to 66.5. Below that, we have support at 57.5 to 60.5. Most likely on first test, responsive buyers will still be active there, because we will be exhausting the range a bit as we head down there. So that's still a valid area and a larger time frame area of support. So we could continue to be contained within the range down at 57.5 to 60.5. And then on the upside, like I said, we do have to see a lot of strength to break out above 81.5 to 83.5. Otherwise, the markets can continue to balance within a range. So, right now, like I said at the beginning of the video, the market can really tip in either direction, and that's why our short-term bias continues to be neutral. The markets have been balancing in a range recently, and for that reason, we have to be pretty nimble within that range, and we have to assess the state of the market in real time to figure out whether there is sufficient strength to break out or sufficient weakness to really break down. And if neither one of those are present in the market, then we can just continue balancing within the recent range and not really make any headway or really break much lower. So those are the main ideas heading into the open. Again, keep an eye on the Russell. I think that's going to provide a nice heads up. And TF is really the market that's at a better area of resistance right now. So if we're going to see a failure, then we're probably going to see it in the Russell first, and then ES will most likely follow. But if TF is not failing at its resistance up here, at its short-term balance area high, then it tells you that there's not really that much broad market weakness, and we know that S&P overall is the stronger market, and then it's going to be tough for ES to break down as well. So again, neutral bias, keep an eye on the Russell. I think that will provide a nice heads up this morning. So let's just keep an eye on the market and also at the pre-market support, yesterday's low, and we will take it from there.